Monday, July 8th, market and analysis, Stan Ehrlich. Good morning. About 10:06 California time. Little bit past the middle of the trading day, traditional hours, California, 6:30 to 1 o'clock. We have overbought conditions in almost every index that I follow. E-mini, that's the spider, DIA and its relatives, and the NASDAQ Qs and its futures relatives. So let's take a closer look. This is the third day we've been overbought after an upside breakout late last week and new highs for the complete trend and historic as well. The previous three sell signals that we had were okay for a very short period of time for scalping and maybe a day. Same thing goes to the three, again, sell signals that we had back in late May. So I didn't get what I was expecting, a significant top. But now with overbought conditions and the market sinking a little, it was a lot stronger earlier. We just might, but I doubt it, get below Friday's low and have a bearish engulfing in overbought condition, which is another ER red sell signal. Just because the last few didn't work particularly well, and surely not for a major bear move, does not mean the next one isn't going to be the turning point. I remind you that it was late July last year, the market topped out until the October lows. So it went down the last part of July, August, September, and bottomed out in October. I don't see why that could not happen again. Timing is similar. Next chart is the E-mini 1 minute. And you can see since the California morning session around right here, 6:30 California time, that shot up even more, topped out with a little tiny head and shoulder top. That lasted, gosh, what is that, 6:30 to 70, about 45 minutes in duration, maybe an hour. It worked great, but that's a pattern, not my strategy or algorithm. I'm looking for the market to come down below yesterday's low, or in the next few days have a bearish engulfing. It could be from a little bit higher levels, but everything is primed for a bearish reversal. And if you look at the spider, it is also overbought, not as strong as it was a little earlier, and could have another bearish engulfing like these other five or so, since May 23rd. That one worked just fine. This one did not, probably a small loss. This one worked just fine. That one did not. This one probably made a little money on a scalp, but not great. Waiting for the big one. Don't think you can, skip, and all of a sudden come back and, oh, I missed it. Here we go. Spider 1 minute. Coming down some after a little gap up at 6:30 a.m. And the Qs. New high also. Overbought also. Downside correction at a minimum for these indexes is going to be down to approximately the previous other couple of bearish engulfing highs. In this particular case, 487. But I don't think that's the minimum at all. I think it's going to be a lot more serious once we see it have a bearish engulfing. Next. Not that much weakness, so I'm not hot to trot to tell you it's going to happen today, but I know after 52 plus years in this business, you never turn your back on the market. And you can never make the market do what you want it to do. You always have to move with it. So when I'm wrong, and I get with it. So now I am looking for a big reversal. I'm not getting it yet. If I do, I'll be starting to talk about rather significant downside potentials, maybe what happened last year, some kind of a July top all the way into October. Hey, just happened last year again, I remind you. NASDAQ futures, higher high, overbought, coming back down to at least some previous highs at a very, very bare minimum, maybe the same day as the reversal day. So I don't think it's going to stop there. I think it's going to go significantly lower. I'll have to figure it out when it happens, but I'm waiting for the signals. NASDAQ 5-minute chart looking a little bit sloppy, but hey, We need to make new lows for the day at a very bare minimum here and start to drop off a lot faster. The Dow Jones still has no problem with its broad double top formation. We had a sell signal on both highs. We had a buy signal on the exact low between the two highs. You can't get better than all three turning points to the day. This last sell signal has not performed the way I expected. The signal itself is now bad as of this morning because we rallied above the high of the signal day. But the market's doing very poorly, down now 86. And although it didn't get overbought, which came so close, my RSI high today was, and I just moved things to the right. I didn't want to do that. And okay, was 74.86. I got to have 75 or higher. It's an algorithm. Close is close. It's not a yes or no, it's a no. Next, the NASDAQ futures have dropped off pretty sharply and are right around the low today. And they do stand a chance of making it down below the low of Friday, which, because the NASDAQ futures did not get, and it came so close, overbought today, I'm not going to have a sell signal, a red bearish engulfing. I'll sure as heck like the way it's acting, and the NASDAQ may be leading the way down here. So it's something to pay very much attention to. Okay, Russell, not particularly interested lately. Sideways trading range, topped out in major historical resistance, that red band. That's 2 years in length. And the short-term chart looks like it's starting to weaken some, but again, really have to get a lot weaker. Bonds. Now, the buy signal you're looking at from Friday's range is based on Thursday's range, which was a holiday. And interestingly enough, it was open. I don't think it should have been, but whatever. That's the exchange, not me. And it was a very small range. That's not a surprise on a holiday day. So the range that it had on Friday was higher and lower than this holiday range. Therefore, it's a very suspect signal. I don't like this bullish engulfing buy signal. You could easily have turned it off so that it wouldn't have occurred and make it a trade. Regardless, the scalp did make some very good money. Remember, it gets long when it gets above the high of the previous day after being below the previous day's low. And that's exactly what it did. So great. Now, I'm looking for probably no upside follow through and it to start to slip again. What about 10-year notes? Because it was not oversold within a few days earlier. It did not turn green, although there was a bullish engulfing. And there's no real follow through here. And I don't think there's going to be. I'm looking for interest rate futures to flounder around and drop off somewhat in the next few weeks, maybe a little bit longer than that. Next, crude, heat, unleaded, then gold and silver, platinum, copper. Okay, overbought. Barely a new high on Friday for the trend up, lately a trend up, last month or two. But getting into the area where it topped out before and closed very poorly, almost had a bearish engulfing air sell signal, but didn't get below the low of Thursday during Friday's range. But it did close real close to its low and came close to a signal. So today we do get some downside follow through. I think it'll drop off a little bit more to 81.30 support and maybe even to the bottom of that support range. Next would be high grade copper. Looking for lower levels on copper, breaking into new low ground earlier this morning, but the low today having been a new low for the trend, we're now above that previous low on a rally. And this could be a bullish engulfing if it gets above yesterday's high, and therefore a buy signal turning into the potential of a broader double bottom formation. I do like the fact it's oversold. I do like the fact that it dropped a little bit below the support area and couldn't stay down there. It's getting popped back up like a ping pong ball being pushed underwater and let go. New lows without a closing and new low ground is not bearish. Frankly, it is friendly. I won't say bullish, but at least some rally probably is going to develop out of this. Bearish engulfing outside down day late on heating oil on Friday. Classic sell signal, close to a double top, not quite. Now dropping into and breaking a little bit below support area, but I think there's a significant more follow through coming. I'm looking for a move down to 2.48, maybe a little lower, but that's my first downside objective approximately. So brand new sell signal after my YouTube, I believe, on Friday. So this is the first time you've seen it. Next, gold, doji, highs tested but not broken, lows tested but not broken, a little on the soft side at the moment. Not particularly overbought, although came somewhat close. A little bit of resistance in there. That would be Friday's high and today's high. I think we're going to dip back down to 2307 again. What about silver? Came up close strong on Friday, dropping off quite a bit at the moment today. Didn't quite get overbought, but it came awfully close with the RSI of 74.16 on Friday for the high. So I think there's going to be a test of the support, lower levels, 29, 20, 2900, 2950 in the next few days. Next is platinum. Got up to the top of a resistance area, just barely closed above it on Friday, looking like an upside breakout, but with a disastrous failure today, opening back into support and going all the way down to the bottom and getting below what was supposedly support is certainly not bullish. Looking for a move down. Now, here's the thing. This is a potential head and shoulder top. The distance from this rally high, the first shoulder on April 12th, is a certain number of obviously seconds, minutes, days, weeks, whatever, a time frame. And if you measure from the top, that same time frame to the right, and that's that little yellow line right here, you find yourself almost one day earlier than this shoulder high only about a week and a half ago. Now, there was two bumps on the left-hand shoulder, and here are two bumps maybe, a little bit bigger, a little bit wider on the right-hand side. That's symmetry. Symmetry is one of the most important parts of head and shoulder patterns. We're heading down fast. The neckline, and here I'm going to do this for you. I'm going to measure the depth of the formation from the highest high on the same day down to the neckline, and now take that measuring stick if you want the depth of the formation. Did I drop it someplace I didn't want to? Yep, by accident. And drop it the day you think it's going to break out. Let's call that a couple, 3 days from now. Minimum downside objective, approximately 803. Next, if it breaks out correctly and does everything else correctly, and you've seen me watch bad ones and good ones and head and shoulder pattern stops and bottoms for a couple of years now. I'm going to say a few dozen. Next, high-grade copper. Overbought last couple of days. Add a little bit of price area resistance at today's and Friday's highs. Turning down some. Well, I think there's a chance it could dip back into the support area again. I'd like to say this is a head and shoulder top, but it's an awfully lopsided one. From the first shoulder, which I don't think is a shoulder, you do have a bearish engulfing ER sell signal to work great for a few days. Nothing as far as the signal is concerned on top, but the number of days from the first shoulder to the top should be approximately the same number of days to the right or into the future. And this is like twice the number of days. So it's just too lopsided for me to call the last shoulder high. Otherwise, there's some features that look similar. Next, and I'm looking for it to go down some. Grain complex. Boy, it's taking me some bouncing back and forth here, but I keep coming back to these lows that we have made or trying to make in beans, oil, meal, corn, wheat in the last few weeks are critically important. Here we have made another new low in soybeans for the whole trend for a long, long period of time. I mean 1 year, 2 years, maybe even longer, depending upon the grain. It is bouncing a little bit, but hardly. I think this is going to be the downside breakout that I thought we had a week ago, and then it bounced for a few days. And this time we're coming down a whopping amount and making another new low, and it does not look like it's going to bounce back. Long-term bearish on beans. So I think that's going to pull down everything else pretty much. Overbought condition in soybean oil because of a rally. I didn't expect it to rally quite this much, but it did have a small double bottom, and the upside objective was in this resistance area, which it hasn't quite reached yet. So even if it doesn't reach it, the bigger pattern is this gigantic head and shoulder bottom, which I've criticized several times. I think it's too big, 2 years. I think it's too bullish. 92 cents is the upside objective. And I think the last shoulder is in the process of being ruined. Although the rally lately did make it look like, hey, back again to life, even if it gets up to this objective. I still want to see any downside movement hold and make new highs again before I start talking about this last shoulder to be legitimate. It's a little too wide. It's a little double bottom in itself, but I already talked about that. I can't help it. Overbought conditions. I think this thing is ready to turn down, and it could be big time. Next meal, not doing anything yet, going sideways for a couple of weeks, but we did get a sell signal on the second high of a double top. We did have a downside breakout for several days. It has come back to some resistance and just gone flat for about a month. So I'm looking for new lows below 341, and the downside objective is 325-ish. Next, corn. This is the classic major bearish long-term breakout. Broke lows going back multiple years. Our last low we did catch exactly on the bottom day, and it did work adequately. I can't say great. February 26th came all the way up into May 15th, and it moved up an honest some 440. We probably got up to 470. That's about the amount of money you might have been able to take out of that. Maybe more. It was possible, but not necessarily likely. But here's the deal. New low by a huge amount a few days ago. No rally of any consequence, only got oversold and went sideways for a few days, and crashing again today. Totally a new low ground, and very, very bearish intermediate to longer term, even short-term price action. Wheat. I think the wheat's just about to do what corn has done, and soybeans might be on the fringe of doing. And after the rally is over in oil, it's going to do it. And meal might be starting it or already did. So the grains just don't have any longer term bullish activity that has panned out. Let's look at cattle. Resistance area spike up on Friday's high, closed relatively poorly, dropping off sharply today to test the lows of the last week and a half already today after making new highs on Friday. That's not conducive to bullish commentary. I think we're going to start a breakdown to 181 and a half, maybe even 180.30, and I wouldn't be surprised if it was lower than that. Miss Piggy, we've got a double bottom, both lows we caught with the bullish engulfing ER buy signals, and now Miss Piggy's stuck in a sideways trading range in a resistance area. Will these two buy signals and the double bottom they create a move up to and get to this minimum upside objective around 98.30? First need a close above 91.17. Then we need a breakout above the close above 82.50, and then I think we're on our way to 98 plus. And it could be easily a plus. The old head and shoulder top worked great and actually went down more than double what it was supposed to. But that's ancient history. We did get, of course, in the top of the market, the head and shoulder highest day, a bearish engulfing sell signal. Next, we're back to the E-mini. And on the 1 minute or short term, 1 minute chart, we had a little spike down, not quite a new low. But remember, I'm just not seeing the bearish activity I know I would recognize happening yet. Have a great profitable day. Profitable trading to you.